What is up, you guys? Welcome back to my channel. In this video today, I'm going to be going over recession-proof stocks that you should buy during a stock market crash. Quite frankly, I feel like you should be buying these stocks pretty much at any point in the market if it makes sense for you and the budget is there and the price is right. So you guys, without further ado, let's just get into this video. Alright, y'all, my hair is straight and nuts, but anyway, if you are new here, what is going on? My name is Nikki, and it would mean the absolute world to me if you would consider subscribing by hitting the MB in the bottom corner or the red subscribe button. Join the crew, join the journey. I post 2 times a week on this channel, ranging from finance, business, real estate, investing, faith, sexuality, my damn life. I believe everybody's life is a journey, and everyone's journey is worth sharing, so I'm just documenting my damn steps along the way. So if you're into that, or if you're into just hanging out with me half as much as I love hanging out with all y'all, please consider subscribing. Now that I got the pitch out the way, and honestly, you guys, I have got to apologize for this hair. You know what, honestly, I would say you guys understand, but you don't understand. Most of my demographic is the male species, so I don't know if y'all know, but when a girl has a bad hair day or you wait too long and it dries funky, there's nothing you can do about it. I'm sure y'all have girlfriends or friends that are girls, so you might understand what I'm saying. Today, this is just how we're doing it today. You guys also do like my new addition back here says Badass Babes Club. I thought that was cool because, you know, I'm a badass, I'm a babe, so I'm not really, what's a babe? I don't know, whatever. Anyway, we have to get into this video. There are a lot, okay, so how I'm going to break this video down basically is I'm going to be picking one stock from each sector of the economy of the market. There are 11 sectors, 11 different industries, if you will, of the economy that we are gonna pull from right now. So in case you do or do not know them, I will toss them up on the screen for you. There's telecom, there's consumer discretionary, there's utilities, there are industrials, real estate, consumer staples, technology, healthcare, finance, materials, and energy. And to be honest, I would recommend purchasing one in each sector as you progress your portfolio, just because that's going to diversify you throughout the market and just make more sense, A, and B, give you a little bit of relief and less risk type of situations here, because when you're diversified, if one of those sectors, let's say real estate, crashes, then you're going to be okay because you have other companies in the other sectors of the market. So that's just my little 2 cents. That's why I'm breaking this down. And as always, my fellas and ladies, if you're out there, do not listen to me. That's really all I need to say. No, you can listen to me, but I'm not a professional. I cannot give you actual legal professional advice on these stocks. I'm simply just a chick here trying to document my journey, and currently my financial journey is through the stock market, so that's where we're at. And always please do your due diligence and education on your own to find companies that you may or may not want to invest in. Do not just take my word. I'm glad we got that out the way. So the first one, y'all, that I want to get into is AT&T. Now, I have talked about this a multitude, an amplitude, is that, I don't know, of times on my channel, especially because I am a long-term dividend / growth investor. I like growth in my dividends. I like growth companies. I like companies that are just solid dividend companies. But this first pick in the telecommunications sector is going to be AT&T. For obvious reasons, this is on my list because it is a dividend aristocrat, meaning that it has paid and uninterruptedly paid its dividend for at least 25 years. It specifically actually has paid its dividend for 36 years. As you can see, if I scroll down here, you can see I currently have 10 shares of AT&T. Their dividend right now, it is a juicy 6.74. I love that. The PE ratio is 15, which I think is not that high. It'd be a good deal. I personally grab it under 30 bucks all the time. You honestly cannot go wrong. A lot of the companies obviously on this list are going to be dividend paying companies, because if they are paying dividends, especially for a long period of time, like this dividend history of 36 years, you can almost count on making that money. You can almost count on the fact that they will always be paying it, and cuts or suspensions or anything like that probably isn't gonna happen. With that reason, AT&T, I love ya. Alright, y'all, moving right along. So the next sector I want to talk about is consumer discretionary, which is an iffy one, especially in terms of recessions or crashes or hardships in the economy, kind of like we're doing right now with Corona. But basically it's optional spending from the consumer. You know, these are places that aren't necessarily, it's just that extra cash, you know, that people just really like to throw at things. It's that bougie extra spending type deal. So the one that I'm going to be talking about is one that I have very recently added to my portfolio. I do only have one share, so it's not that, it's, you know, and I'm really excited to have this one. I've wanted it for a long time, so I went ahead and grabbed it, and that one is McDonald's. Now you guys, this one, I don't really eat at McDonald's that much, but occasionally a Coke, some fries, some McNuggies, they kind of hit the spot. And to be honest with you, the reason why this is on my list is because of a lot of reasons, but I'll try to narrow it down to just a few for y'all so I don't lose ya. The first one is the fact that McDonald's has been here for a very long time. I feel personally that McDonald's will be here for a very long time, and to be quite honest with you, when we're looking at the whole scope of kind of like fast food and kind of like food addiction, even though I don't really think it's great, there is something to be said for cravings and those kind of things. And so for that reason, I don't really feel like fast food, especially McDonald's, I mean, you got some die-hard fans at McDonald's, to be honest with you. So I just really feel like they are solid. It's a blue chip. They have a dividend payment here of 2.68%, which you know I like. For obvious reasons, this dividend payment has been growing and uninterrupted payment for 45 years, and recently the CEO has disclosed and said that the dividend payment for McDonald's is a priority. So because of the reason that the CEO is putting such a heavy emphasis on paying that dividend and making sure that dividend gets paid out and consecutively and consistently like it has for 45 freaking years, makes me feel very comfortable that no matter what is going on, McDonald's is the way to go. I mean, you can get a large, small, or medium drink for $1. I mean, that's pretty recession proof if you ask me. So I don't know, I just love McDonald's. I'm so happy I finally own it. I want to own more, but I just sometimes paying 180 bucks for a stock just really, it gets me right there a little bit. It's a good investment. Okay, you guys, the next sector of utilities here, I have to be completely bluntly honest with all of y'all. I don't really own anything in the utility. You know, this has been a very good exercise for me because I have realized that I do not own enough of different companies in different sectors. Okay, that's really all I gotta say. So in the utilities here, I had to do some research. I had to, you know, pull up some sheets, had to pull up financials, had to pull up articles, history of companies, things like that, and really dive into more of the news, the analytical, logical side of these companies, because I am not well educated, I guess, in the utilities sector of the market. So with my research, I went ahead, I found this company that I feel as though it's a good, solid company. I think right now it's definitely overpriced, but I do think it's one to maybe add to your watch list to maybe, you know, feel it out in the future, see if it dips a little, you know, that red day, blood day, bath, discount day kind of thing. So the reason why I actually kind of picked this one is because the company was founded in 1927. So for me, I'm like, okay, it's been through a lot. It's an old established company. It's made it through the financial crisis in the 07, 08, 09, even all the way through, you know, 2011. So this is specifically in like the electric utilities. I mean, utilities are basically what you pay for every month. It's your utilities, so it's like gas, electric, that kind of stuff that you're gonna be paying for. So yeah, let me just put this up on the screen for all y'all, because maybe you have it, maybe you don't. But it is Eversource Energy, I believe it is, or Eversource. It is Eversource right here. So see here, I think it's honestly overpriced. I mean, it went up 3.5% on Friday. I mean, I'm currently on a weekend, so the market, that's another thing. These prices are obviously going to be changing because I'm filming this video on a weekend and nothing goes on the weekend. So scroll down here, they do have a dividend of 2.71. See that PE ratio of the 29.4? It's a little elevated for me to like dive in initially to like start a position here. And as we can see here, I mean, Morningstar goes at a 1, so it's overvalued. Fair value is at 64 bucks. It's currently trading at almost 84. So like I said, I think it's a little bit overrated right now. But because of the research I did here, so I found out that the dividend had 6% growth this last year. I found out that they've been paying this dividend out uninterrupted for 21 years, which is not as much as some, but it's still enough to have an established history of something that I feel like could be very reliable. The company is a $27.2 billion cap, so it's in the billions, which I definitely like. It's a larger year-ish cap. And to kind of piggyback off that 21 year, I mean, a Dividend aristocrat is a 25 year, so I feel as though it's going to do everything it can to get labeled as that Dividend aristocrat, so that makes me a little bit more comfortable. The payout ratio of this stock is actually, or its company is actually 62%, which really isn't that bad, and simply Dividend did give it a score of 88, which is very safe. So in my eyes, I just feel like this has been around for a while. It's got that Dividend aristocrat, you know, goal, desire, need coming up here. I don't think they're gonna mess up too much. From what I saw, they're pretty good with cash. I think, I don't know, I mean, like I said, do your own business here, but I personally had to do a little bit of research because I don't have utilities, so this one has been added to my watch list. I'll keep an eye. If it drops down around where I think fair value is, I might dive in on it, just because I don't have any utilities. But let me know down below if you've heard of Eversource, if you've had it, if it's your pick in the utility sector. Just let me know what your pick in the utility sector is, so I can like better, you know, educate myself on maybe a better pick. But from what I did and looking at it from that Dividend perspective, I think it makes it pretty safe. The industrial sector is next, and let me tell you, it's one of my recent-ish additions. I absolutely love this company. I'm obsessed. You know what? I found myself very obsessed with a lot of companies and stock, and I want them all. You know, like Pokemon, like Yu-Gi-Oh. Remember Yu-Gi-Oh? If you played Yu-Gi-Oh, I played the Yu-Gi-Oh. I don't know if I should be a millionaire or not, but you know what it is. I had an older brother. We went to the card shop. We'd always get them Yu-Gi-Oh cards. We'd be battling out with that. What was it? That three-headed blue-eyed steel dragon or whatever. You know what? Just show me some love in the comments below if you played Yu-Gi-Oh. But the next one I want to talk about is the industrials. I got off, you know what? She got off track. She coming back. Come on, Nikki, come on back to this, to the video. If you don't own this company, get it in your portfolio. That's all I gotta say. And that company is Waste Management. Let me just start off here with what I got going on with Waste Management. 3 shares. I got them at a 97.25. Dividend yield of 2.04%. The PE ratio at this current moment is a little bit high, but you know what? Long term, I love this. And here, I'm gonna tell you some reason why it's on my list. I'm gonna try to keep it short, sweet, to the point. It has a 6% dividend growth this last year. It's been paying its dividend for 17 years. It is seeing that aristocrat label. You know, it's seeing it in the future and it wants it. But here's the main reason why I absolutely love Waste Management. It is the creme de la creme. It is the largest network of recycling facilities, here's the thing, like, if you go out your door, maybe not now because Corona's out there, but I'm just saying, like, if you walk outside and you were to take a loop around the neighborhood, I would go out on a limb to say about 80%, if not 100%, but you know, I'm gonna cover my ass here, but about 80% of people's trash cans have a big WM on them. I could go on for days, but literally this is the largest, like this is the largest network of all of that land. Like I said, the landfills, the processing plants, the everything. Like they don't have really any competition, and because of that, I see it as like this behemoth of a company that's not gonna be taken down. And if it is, it's gonna be a long time till it gets taken down. But I just feel as though it's a very secure thing. I mean, people still be producing trash, okay? I mean, we can't go outside right now. Our economy has been shut down, and the fact that we're still getting food and having trash to put into the trash cans for the trash man to come pick up, therefore keeping Waste Management in business, I just don't ever see this company going anywhere. I will be adding to this for sure, but yeah, that's why it's on my list, y'all. I don't know what else to say. I absolutely love it. It's a heavy hitter. It's #1 in my eyes in that sector. You cannot find better. All right, y'all, we're moving right along here. Yeti, I'm telling you. The next sector is near and dear to my heart because I am a real estate agent here in Southern California. The real estate sector of the economy is always one that people are very concerned with. It's just a heavy, I feel like in my eyes, it's just a very heavy sector of our economy. The stock and company that I'm going to talk about, I do not currently own, which I want to. But the thing about REITs is the fact that you get taxed as a capital gain instead of like a dividend tax. So because it's monthly, so like this company pays a monthly dividend. If you already know what company I'm about to say, just hit this right here, okay? I think everybody and their mother knows this stock, talks about this stock, owns this stock, except for me. But that stock is Realty Income. Now, you guys, like I said, I currently do not own this, but they do pay dividend at 5.06%, which is pretty good. Obviously, you can see here with this whole issue, they're down 20% still overall. Here's the thing about Realty Income, though, that is very appealing. They have been paying their dividends uninterrupted for 25 years, and 21 years of that has been growth. And here's some kind kind of like side information that I really enjoy about Realty Income and why I would put money into this REIT, because of two reasons. The first reason being that their tenant base is made up of large national, regional operations that have really good, easy access to financial aid and resources that like little mom and pop kind of like small family owned businesses that they just don't. So for me, that has a little bit of a sense of security, because I know if times get hard, there's more of a resource for them to get more cash. So their tenant base is like Walgreens, CVS, Kroger, Home Depot, FedEx, like really big heavy hitters that are just solid. I mean, they're just solid. There's really not much to say about that. The second reason why I love them actually is because of the fact that most recently with their earnings, they were #1 with grabbing rent. They collected 83% of April's rent from their tenants. So for me, that is extremely important, because I know the whole idea of them having larger operators in their buildings are really an asset and really fulfilling the idea of the fact that they can get money to pay their rents. Those two reasons, plus the fact that it's monthly paying and it hasn't missed a payment, and it keeps growing its dividend and it comes to me literally every month, even though I'm gonna get taxed more on it, is a very big positive in my eyes. Realty Income should definitely take the sector of the REIT, because there's really nobody better, I don't think. The next area of the market that we're gonna be chit-chatting about is consumer staples. This is one that I have talked about really loving, and it's one that has made an appearance in many of my videos, and that is Pepsi. You guys already know I honestly, I have a confession to make, and I'm gonna make it quick. But in a previous video of mine, I claimed to have liked the products of Coca-Cola better than Pepsi, but I liked Pepsi's numbers better than Coca-Cola. And I have to say, I may have changed my mind. I continuously find myself drinking Diet Pepsi Cherry, Diet Pepsi. I don't know, I might have just been converted. That's all I'm gonna say. Alright, there's honestly so much to say about Pepsi that I'm gonna try to really just saddle your shit up and let me just get through this. So they have been paying and growing their dividends for 47 years. I read an article that they are on track to go from a dividend aristocrat to a dividend king by 2022. This is extremely safe. That's probably why Simply Safe Dividend gave them like a 93 or something like that, because if they are that close, there's absolutely nothing that is going to like take them off track, get them confused, get them messed up. Like, they are going to be making these dividend payments because they want that title of king. Okay, they want to put on the crown, they want to flaunt it around, puff their chest out, and they just want to do the damn thing. And like I kind of just mentioned, I really am a fan of not only their beverage. See, that's the thing with Coca-Cola, like they got a line of beverages. They got that whole lineup, which I do enjoy: a Coca-Cola, Diet Coke, Coke Zero, Coke Cherry, Zero Cherry Coke. But Pepsi got the same, honestly, they got the same damn thing. Plus, they have snack and product lines and brands outside of just their beverage lineup, like Doritos, Frito-Lay's. So you can crack open a cold Pepsi and have a bag of Doritos. Pepsi's just winning the whole damn thing. It just goes to show that their product line is extremely diverse. Like I mentioned before, they acquired Rockstar Energy, so now they're getting their feet wet in the whole energy thing, like really diving into the whole energy drink market. And I just really feel like adding Pepsi to your sector of consumer staples is a great option for all y'all. Let's move on to the next one. The next one is technology. Okay, like I am such a tech nerd. I could go on for, I could have another channel about tech, to be honest with you. I'm obsessed with it. You know, here's the thing with this sector, there's really two heavy hitters, and you're either kind of one team or the other. You might be able to be both. I'm a little bit of both, I think. And I think you guys probably already know, but my choice is going to be Apple. I mean, here's the thing. See commercials of companies like outside of the tech space, just in general, or photos or images or marketing or ads or anything. I'm telling you, the fact that an iPhone is what people use in those depictions, like they always have an iPhone. Like literally, it's just iPhones freaking everywhere. So I feel as though that alone is like enough of a reason to be like, oh wow, they're dominating. I'm an Apple gal. Okay, got the Apple Watch, the iPhone. I'm gonna get an iPad someday. I want the iPad Pro so damn bad. I'm gonna upgrade probably the iPhone 12. You can't not like Apple. I mean, I guess you can. All those Samsung, Android fan freaks out there, cool. Not that you're a freak, totally respect your choice. But I'm just saying, it's a movement, it's a whole situation. I shouldn't have to say more than that, but I'll get into a little bit of the numbers for y'all here. They're currently trading at $3.19, which I honestly think at this point is a little bit overvalued for them where they're at. But I do have 2 shares at $308.90. I would love to see that under 200. So if it ever dips or what have you, I will be adding more. They do pay a dividend 1.03, so it's not like a dividend stock. It's just a very solid stock. They're constantly always trying to improve, and I think for me, when I look at a stock that has to keep up with the times, I mean, the technology sector in and of itself is just trying to do that in general, but Apple just does it the best. I mean, they're so cash heavy, their numbers are so good, and Apple's just going to continue to grow and be the powerhouse that it is. So let's just move right along to the next one. All right, y'all, so this next one is a company that I've talked all y'all's ears off about this damn company. It's one I do not own it yet, unfortunately, and I feel like it's just overpriced right now. But when I think long term, I'm like, it's really like, whatever, just put your money there already and shut up. It's the healthcare sector, so y'all already know what I'm gonna say. Comment down below your healthcare sector choice that I'm gonna say. Just do it. I'm gonna give you a second. Just go ahead. Go ahead. Did you do it? Come on, don't play. No, don't play with me. Y'all guess it. It is J&J, you guys. I absolutely love. I just can't. I'm gonna just really lightning round the shit out of this and let you know why I am so obsessed with it. As you see here, the dividend is 2.72. Now Robinhood, I will say Robinhood is off the dividends most of the time. I think it's more around a 2.2 or 2.3. I could be wrong, but whatever. It's that let's just say 2.5. It's currently trading at 148.75. This company has been paying its dividends for 57 damn years. Like, come on. They're not playing around with all y'all's money. Okay, they're making so much money. They're like, you know what? Here you go. Here you go. Here you go. And they've done that for 57 years. So the fact that they can do that makes me very comfortable and very secure. And here's the other thing. They are in the healthcare sector. Healthcare, needing medical care is never something that I see is going to be going out of style. And kind of just like Pepsi, their product line is very diverse. They basically have like 3 industries in and of themselves that they produce products for. We have consumer health, which is like skincare, eye care, like, you know, cosmetic care, like just lotion and powders and oils and stuff like that. And then they have medical devices, so they're like, you know, orthopedic, cardio. They're working on medical devices to help medical professionals, whether that be surgeons, practitioners, nurses, primary care, interns, specialists, stuff like that. And then they have the pharmaceutical sector of their business, which is like vaccines, obviously medications for things such as diabetes, hypertension. I mean, honestly, the list freaking, it goes on. And I absolutely love it. I'm just a fangirl. I just need a shirt that says J&J all day. If you would buy that, let me know. Just another little number tidbit with the whole dividend, the paying for the 57 years. Their payout ratio is only 52%. So like I said, they're making so much damn money that they're only using about half of that profit to pay everybody. I don't know, you guys. This is just one that you honestly, you can't go. Yes, they've had lawsuits against, you know how many people have tried to sue Johnson & Johnson, and they still big, bad, proud. There's not another company in this sector that I would wholeheartedly say you can't go wrong with. I might eat my words in about 5 years. I mean, you know, no one knows, okay? I don't know, but I'm just going off what's in here. And I think Johnson & Johnson is one of the best bets you can do. All right, as my hair frizzes, next stock and industry and sector I'm going to be talking about is financials. Now, financials, they're a little iffy. I feel like they are at most risk of not being able to adapt to like future and electronic payments, and just, I think that's why crypto and Bitcoin were like such a heavy hitter and people really got into that quick. I don't think we're there yet. Here's the thing, money is so crucial and detrimental and precious, important to people that that's why I think it's a little slow to kind of adjust to those things. So I think there is a time and day where they're going to not die, but if you don't adapt, you're going to die. One that I'm going to pick for this list specifically, I do not own yet, and that is Visa. Okay, you guys, I really love Visa for a lot of reasons, but I'm gonna try to keep them short for y'all. If you look here, the dividend is only 0.61, so it's really not known as a dividend stock. It's more of a growth. If you look at the 5-year, I mean, that alone goes to show you that it's a growth. See the PE at 36, I think it's a little bit much. Anybody pulls out a debit card right now, I would go on a limb to say about 96% of those are Visa. Even though they have a small dividend, they have been paying it for 11 years, which is like fine, that's cool. Their payout ratio is extremely low at 24%, but they're only paying out a 0.61, so I wouldn't expect that number to be very high. But the main reason why I firmly, wholeheartedly love this company is because It truly is the pioneer of modern credit and debit card. Introduced in 1975, which doesn't seem that long, but I mean, we in 2020 right now, so I mean, that was a little bit of time ago. It is the second largest payment processing network, and the first one is like Chinese or something, so I mean, technically, if I'm thinking about this, it's basically number one in my eyes. And with all the debit credit options that are out there, Visa and MasterCard make up 85% of the market share. So even though there are a bunch of options, these two companies are really holding it heavy. And just the fact that I personally have Visa cards, I know almost every one of my friends' debit cards a Visa card, and the fact that they have been able to dominate the processing network, they've been able to dominate the market, hold on to such a high rate of the markets, I am wholeheartedly going to believe and put money into a company like that. And the fact that they're the founders, okay, they're the ODMGs. And I kind of just trust as life goes on and payments change and the whole idea and concept of financials change, that they will be able to adapt because they've done it thus far, basically at number one. All right, guys, moving on to the material sector of the market, I absolutely do not have anything in this section. Kind of like utilities, I had to do a little research, you know, a little journey, a little venture. So it is Martin Marietta. Is that even how you say that? MLM is the ticker symbol. Let me just show you a little bit of the stats here. The dividend is 1.15%. The PE ratio is about a 20, which really isn't that bad. The 5-year, I mean, it's a little sloppy. Let's just go into what I found here. I mean, we got a 50% buy. That's pretty good. The fair value is at 230, so it actually looks like it seems to be maybe at a discount, so that might be worth really looking into. But to kind of go into a little bit why it's on my list. So even though it does have a low, the low dividend yield of the 1.15, they have paid that out for 25 years uninterrupted. The payout ratio of it is like 26 or something like that, so it's very low, which at a 1.15 it probably should be. There was a 12% growth in the dividend last year. As I looked over this company's balance sheets, they were very like pretty much low debt. They had very good financials, which always makes me a little bit more comfortable. And the real, not the real reason, but one of the reasons why I looked at this one was because they basically send out products and materials to heavy construction companies, and they send out their heavy building materials to these construction companies and industries, which for me, being in the real estate business, I was kind of leaning towards that just because I am familiar with construction and building and materials. This kind of goes to show that like you need to pick things that you somewhat understand. I mean, I know nothing about this sector, I've already said that, but you gotta dive into it and you gotta really try to connect with something that you somewhat can get a grasp of, and so that's kind of why this one's on my list. We have got to wrap this up before this. So the last and final sector is energy. Now, energy is always very cyclical. It's very politically kind of based. I'm not like a huge fan. It kind of falls within the utility material situation for me. That is Chevron, ticker CVX. This has been around forever. You guys, you can see here they have a 5.63% dividend. Their PE ratio is freaking 45, which I think is a bit much. If we scroll down here, 83% say to buy it, probably mostly because it is one of the two biggest heavy hitters in the industry. Their fair value is actually 111, so maybe it's not overpriced. Just going based off that, I mean, obviously don't base your decisions just on that quick of a kind of scroll through the stats. It did have a growth of 8% last year in its dividend. It's been paying this dividend out for 32 years uninterrupted. They don't want to mess that up. And the fact that it was founded in 1879 really goes to show that this thing is surviving. I do want to add it. I don't have a lot of energy in my portfolio, so I am looking to add Chevron as well. But like I said, do your own due diligence. No one ever really knows what's going to happen. I mean, they could totally just disintegrate in the next 5 years. Who knows? If you've enjoyed this video, if you got some sort of value out of it, if you enjoyed hanging out with me, if you enjoyed the fact that my hair is now bigger than the size of the United States, please give this video a thumbs up. It means the absolute world to me. YouTube algorithm loves it. I love that it loves it, and I love all y'all for hitting that like button, making it blue. And if you are this far in the video and you are not subscribed to the crew or the journey, I don't know what to say to you besides hit the damn button, subscribe, join the crew, have some fun. All y'all already know, if you've made it this far, you're the real MVP. You get some kisses. Come here. You know I love you. And you guys, as always, enjoy the journey, whatever your journey is. And always remember to do what sets your heart on fire. And I will catch y'all in my next video. Bye, guys.